Welcome back. Samvardhana Motherson is surging in trade today on the back of reporting a strong set of third quarter numbers. It reported the highest ever quarterly revenue. Margins came in above 9.5% for the second straight quarter. We have Pankaj, Mital, whole-time director and president at the company, to take some questions. Thank you very much for joining us, Pankaj. Good morning and congratulations. It's a strong set. Some specifics, I guess, if we can tackle first. Margins for the modules and polymer business came in at 9.7. Integrated Assemblies 15.2. I guess the margin beat came through from these two segments, right? Is this structural? Is this one-off? And will you be able to sustain margins in these segments and then consequently overall numbers?
Good morning, and thank you for hosting us here today. Well, the company is having a diversified portfolio. And definitely we had highest ever quarterly revenues and good profitability. Our emerging businesses have also done very well. They led to a growth of about 57%. And the emerging businesses, especially the consumer electronics and aerospace business, is also poised to grow. The modules and polymer business has done well. We had announced in Q1 that of the transformative actions which we were taking, and these transformations have yielded results, and we will continue to see good results as we move forward. Similarly, in the integrated assembly, this is a new business which we had acquired. It was a profitable business which was doing good, and then it has had synergies coming from the group. It was only doing assemblies. As we move forward in the group, we have had more integrations. We could do more products, which could be inbuilt into these integrated assemblies, and hence we have seen a good, robust performance. We do believe that the markets are doing well. There is a stability as we move forward. The overall car volumes in the next year are also projected to be quite robust. The commercial vehicle industry had taken a beating in the last quarter.
We'll come to the volumes, actual volumes, Pankaj, in just a bit. But margins, you're saying, so the answer is in the affirmative, that you'll be able to hold. This is structural, this is improvement is here to stay, and margins will be at least what you reported in the quarter or higher?
Yes, basically these are structural. And as we move forward, these businesses are also global. They're in different regions, different sets of customers, different profiles, but these are structural in nature.
And this 20% increase in copper prices, did that negatively impact margins in Q3? And how will it affect margins going forward? Is there a pass-through clause?
Yes, we do have pass-through clauses with all our customers. There is a lag in the recovery of copper prices, normally about a quarter or 6 months in some cases. So as we move forward, these will get averaged out, but they definitely have an impact of about 1% on the wiring harness business.
Okay, so there was a 1% impact on margins on account of higher copper prices in the wiring business. But in the next 1 or 2 quarters, there will be complete 100% pass-through.
Yes.
Okay. So what percentage of your revenues come in from the non-auto segment? Because you are seeing some very strong growth, for instance, in aerospace. So can you give the current performance in Q3 and the outlook on that, on the overall non-auto business?
Overall, if you see, the emerging business has grown by about 57%. Correct. Out of our total growth, this emerging business also includes the integration of Atsumitech, which we had acquired. And the non-auto business we had mentioned last quarter was contributing around 5% of our total revenues. But these are businesses which are growing at a very fast pace. As you would see that our consumer electronics business is also poised on its ramp-up trajectory. So by the end of 26, financial year 26, we will be on a good way to produce about 16 million. And then with our plant 3, which is the largest plant in our whole group across all our divisions, is going to more than double the capacity again. So this is how we are poised on the consumer electronics side. On the aerospace side, also, we are tier 1 supplier to the major aerospace companies. And with the FTAs coming in, both from the European Union and also from the North American side, it will also give a very good tailwind to these businesses to grow further.
The aerospace manufacturing is in India, Pankaj?
It's also global. We do manufacture in India as well as in Europe at the moment. And as we move forward, it will again become more and more global. But yes, the aerospace companies have very strong interest in India.
So the share between automotive, aerospace, and consumer electronics, what is it at now, and where do you see it?
As I mentioned, that the non-auto business in the last quarter, last to last quarter, when we had announced, was about 5%. We do see that our auto business also tends to keep growing, but these new businesses, which we had set up about 6, 7 years ago, from nearly zero, they have come up very well. Consumer electronics was not there at all, and these are all being driven with the interest from the customers, and they see a good execution capability in Motherson. They say that over a period of time, what we call as DEMAL, design, engineering, manufacturing, assembly, and also logistic capabilities, which we have built. So we have become a specialist, which helps us to support many different industries. And that will lead to our 5-year goal, a vision of about 108 billion.
And since, so this non-auto revenue is roughly 5%, 2 quarters back. But because you're expanding capacity, consumer electronics is also seeing strong traction. What will that number increase to, and how are the margins? Because on the whole, when we look at your emerging markets business, the profitability is weakish.
That's because you see that there is a huge investment which has been there and the new acquisition which came in. So when you see the emerging markets, you will see that. But over a period of time, as these capacities are bringing in the new volumes, it will even out. And we do see, as I was mentioning earlier, that the automotive business is also growing. The two new acquisitions, which are at different stages of completion, relating to Nexans as well as Yutaka Jiken, will also come in place, which will be giving us more than $2 billion of revenues in the coming years.
What could FY27 then look like because of the acquisitions? Then 10 of the 12 greenfields are also likely to be completed in FY27. What would the number look like that you're targeting next year?
Well, we are targeting a 5-year vision, and we do see all engines firing at the moment. Good growth. Markets should become better. With FTAs, also seamless supply chains will come in place. So we do see a very positive environment as we move forward.
Your Capex during the quarter, sir, was about 52% of the EBITDA. What is the Capex number? The number is 1,594 crore for Q3. What is the Capex number for FY26 and FY27?
Well, Capex for FY26 will be in the range of 6,000 crores plus 10% what we had mentioned. So we'll be around that. And for 27, we'll be coming at the end of this next quarter as we firm up our plans.
Will it be higher directionally?
Well, we see that, sorry, go ahead.
No, go ahead. FY26 Capex compared to 26?
Well, FY27 Capex, we will come to you end of the next quarter. We do see good growth coming in, and we will let you know at the end of the quarter.
Yeah, so just one question on consumer electronics, right? So you were tied up with this company BIEL on the glass front, right? And presumably the client is Apple. So you're supplying to them, and then they kind of use this, or you're using you're part of the value chain here for stuff which is being made in India right now.
Yes, we have a partnership with BIEL, who they are our technology partner, who help us in processing the parts which we manufacture, and then we are part of the supply chain.
For the phones which are assembled in India?
Well, for different products, and you know what BIEL manufactures, so that's what we do.
I see. Yeah. And hope is that, I mean, you'd be able to sort of, increase and do more along the way.
Yes, when the plant tree comes up, we will also be doing more vertical integration with this, so the value content will grow. And as we move forward, we believe we will have more products, and the customer penetrations in different segments will grow.
Okay. One final question. In the North America CV market, you've spoken about a 5% quarter-on-quarter increase. Is that a cyclical bounce or the start of a sustained upcycle?
Last quarter, there was a downturn by about 27%, which was very sharp. The EPA 27 norms will be coming in, and that will lead to some pre-buy. So we do believe that the North American market will bounce back in this year. We have already started seeing the reports coming in from different commercial vehicle makers that their fleet owners are asking for more products.
Got that. Thank you very much for joining us. Appreciate it, and good luck as you continue to execute across a range of segments there. So that's Samvardhana Motherson. Stocks up about 4.5% as we speak.